Hey, this is Chris from Stockspot, and in this video, I'm going to be answering a question we get quite often from clients, which is what's the difference between your Topaz range of portfolios? We have the regular Topaz portfolio, the Topaz sustainable portfolio, the Topaz inflation portfolio, and the Topaz income portfolio. So I'm going to be explaining what they are, how they differ, and help you decide whether one is right for you. The first one I'm going to talk about is the Topaz portfolio. So this is the high growth investing option we've had available since we launched over 12 years ago now. And over the last 10 years, this portfolio has returned a little over 10% per year. So it's the highest returning of our model portfolios, but it's also the one that's experienced the most volatility, the biggest ups and downs, because it has the highest allocation to growth assets. It has a 78% allocation to growth assets like shares and a 22% allocation to defensive assets like government bonds and gold to help cushion portfolio returns when share markets aren't doing too well. So this is our most popular investing option of our model portfolios. And it's really the one we recommend for people that don't want to make an active choice because it contains a good mix of different types of investments. You have Australian shares in there, emerging market shares, global developed market shares, the biggest 100 companies in the world, and you also have some defensive bonds and gold to help cushion returns. It's a great, sensible, long-term investing option, and the one that most of our clients are in. In fact, a little over a third of our overall assets are in this Topaz portfolio at Stockspot. The next one I'm going to talk about is our Topaz sustainable portfolio. So this is a portfolio with a similar level of risk to our Topaz portfolio, the same asset allocation, so the same percentage in growth and defensive assets. The only difference is that we've switched out the share market ETFs that were index ETFs in our model portfolio to sustainable or ESG themed or focused ETFs for this portfolio. So we've researched the market and worked out what are those ETFs that reflect the values that we think our clients are most aligned to who want to invest in this sort of way. And rather than being exposed to the ASX 200 ETF, you're exposed to a ETF that actually has a bigger focus on ESG companies and companies that have been screened based on a certain methodology. So this is a portfolio that's popular with people who want to express their personal values through the way they invest, still want diversification and access to growth over the long run, but don't want exposure to certain types of companies and certain sectors of the market. And this is an area that's been growing globally over the last 10 years, and certainly we see a lot of interest in this portfolio as well.
Sorry for interrupting, but I'd like to take a moment to talk about my channel. Now, most people who watch my videos don't subscribe to my channel, which means that they don't find out about other videos I'm making, and it doesn't share the love with others who are interested in investing. So if you are interested in videos like this, I would encourage you to please subscribe to my channel so you find out more about the videos we're making here.
The third one I'm going to talk about is the Topaz income portfolio. So this again is a similar level of risk and a similar asset allocation to the Topaz portfolio, and that's why it's called a Topaz portfolio. The only difference is that it's focused on ETFs that generate historically a higher proportion of their total return in income generating assets. So rather than earning a bigger proportion of your return in capital growth, you actually earn a bigger proportion in income instead. So we've added more dividend focused share ETFs to that portfolio, and that's what increases the yield or the distribution yield of that portfolio. However, there's a bit of give and take, because if you're expecting a higher dividend yield in a portfolio, you should also reasonably expect a lower capital growth component. So overall, the total return over the long run is quite similar. So we launched this portfolio late in 2023 because we saw a lot of interest, particularly with retiree and older clients who wanted more of their portfolio return coming from distributions and dividends, so they didn't need to draw down on their portfolio capital in order to access that income year to year. And we're seeing a lot of interest, particularly from that type of client in that Topaz income portfolio. It's also had very good returns over the last couple of years, which shows that it really does match the similar risk level to the regular Topaz portfolio, and for a certain group of clients it's a great option as well. The final and fourth Topaz portfolio I'm going to talk about is our Topaz inflation portfolio. So similar to the income portfolio, it has a bit of a thematic to it, but rather than generating a higher proportion of its growth in income, This portfolio really has a bigger allocation to assets that have historically done well in periods of higher inflation. And those assets are hard assets like gold and silver, as well as gold miners, resources shares, and assets such as infrastructure. So it's still a diversified portfolio. It has a similar weight to growth and defensive assets, but it's tilted towards a certain type of asset that has historically performed well when inflation and inflation expectations are higher. Now, this portfolio has done phenomenally well over the last 1 year. And in the year 2025, it actually returned a 50% return in 1 year, mainly because assets like gold, silver, and gold miners did so well last year. That's certainly not a return I would expect to happen all the time, and there'll be periods where these inflation-focused assets don't do as well. Over the long run, I would expect this portfolio to return a similar return to our Topaz portfolio, but it won't happen in the same way. And as we saw last year in 2025, inflation assets did spectacularly well, whereas other assets didn't do quite as well, and that's why that portfolio did very well. What I would say is if you're investing in this portfolio, make sure you also have a time horizon of at least 7 years, which is the time horizon we recommend for all Topaz portfolios, because it's likely to be more volatile than our regular Topaz portfolio, just because it is geared towards these assets that tend to move in tandem as they did last year. So although we did see a big 50% up year last year, there may be some down years as well, and there may be more volatility than our Topaz portfolio. However, I do think, again, it's a great option for people over the long run who want to protect the purchasing power of their money and have more exposure to hard assets like gold and silver in their portfolios. And that's a summary of our 4 Topaz portfolio options at Stockspot. They're our high growth options, our most popular options. And if you want to find out more, I would suggest coming to the Stockspot website and having a look at the portfolio section so you can compare the differences and download our fact sheets as well.